Do you think banks will hold your XRP? Do you think they're setting up vaults and other ways for small investors like you to keep your money safe? Not so fast. At this very moment, the talks that are taking place behind closed doors are not about how to keep your XRP safe. They talk about how they can use XRP to improve their own finances and the methods they use for their businesses. What's going to happen in the next few months will separate those who are ready from those who are still waiting for the banks to save them. This is not advice about money. Let's get one thing straight from the start. Banks take a while to do things, moving quickly because of rules, paperwork, purchases, mergers, board decisions, and government watch. That's why Jake Claver wasn't lying when he said he had talked to Fidelity, Schwab, JP Morgan, and Bank of America, and none of them were ready to hold XRP for the public. It doesn't have an FBO account. They do not have buildings that are insured. They don't have separate accounts for your crypto that would protect them in case they go bankrupt. The building blocks aren't there. At the same time, separate people are already joining in. To give you an idea, Digital Wealth Partners offers up to $100 million in insured custody through Lloyd's of London, fully separate, the whole organization, the real deal. It's not just business jargon. Because do you know what? These smaller institutional grade firms are locking in clients, building systems, and getting ready to move when demand goes through the roof while the big banks do nothing. Now, I want to quickly add something for everyone to see. About 2% of the whole stock. What about the other 98%? Institutions, businesses, Ripple, trust that is locked or just lost forever. So when you ask a banker if they can hold your XRP, you should know that they have no idea who you are. Not many people know this, but they are testing how they can add XRP to their own payment and settlement methods. The largest bank in the United States, BNY Mellon, is already in this game. They have been given the job of managing RLUSD, Ripple's stablecoin. Take a look at that. Ripple's system is directly linked to the oldest bank in the United States. That's not just a guess. That's a tough marriage. And controlled banks in South Korea already work with Ripple to store XRP. This isn't news about stores. It's building up institutions. It gets bigger. According to news from Asia, up to 80% of Japanese banks are getting ready to use XRP to send money around the world. 80%. That's not a lie. It's not a guess. That's how a banking system gets ready to use Ripple technology. Ripple thinks that by 2030, 10% of the world's assets, or $16 trillion, could be turned into tokens. You can start to picture how big the movement we're entering is. But here's the catch. Prices will have changed by the time Bank of America or JP Morgan starts letting regular people store XRP. It will be too late for the boosters to work. The market will already be driven by that big liquidity. Like always, they'll be late. Of course, the people who were there first, before the ETFs and the big custodians, are the ones who will gain. Now, I'm going to talk about something you'll hear a lot. That high number for XRP is not possible because of its market cap. You may have heard that $5 to $7 is the best price for XRP. That's the top. That's the highest it can go. But they're missing one very important idea: multipliers for market caps. This is how it works. When money comes into XRP, it doesn't go from 0 to 1. It's made stronger by the liquidity system. A lot of money poured into XRP during Jerome Powell's latest speech. The market cap went up by $15 billion. That's 480 times the amount. Take that in. The market value grew by $15 billion when $30 million came in. That kind of math blows up the old claims that XRP can't go higher. Yes, that ratio does go down as liquidity goes up. It won't always be over 100. When the value of XRP gets closer to that of Bitcoin, those ratios drop to 5x or 8x. But since there isn't much money in the market right now, that's why you see these crazy moves whenever big money tests the waters. When ETFs go live, more institutional custody options open up, and regulated banks in Asia and Europe start using XRP every day, the amount of money coming in will no longer be measured in millions, but in billions. Mark McClough of Canary Capital has already said that he thinks an XRP ETF could bring in $5 billion in the first 30 days. It's been said to be $1 billion or $10 billion by different people. There is no way to know the exact number, but we do know it will be big. The market cap multiplier of this kind makes the gain very big when billions of dollars flood in. Why do experts say that XRP will only go up to $7 or $8? Because we think they don't understand what utility demand and ETF demand really mean. They are using Bitcoin's path to guide the development of a totally different asset with a totally different use case. Bitcoin has never had the connections with big businesses that Ripple has already made. Bitcoin is not being added to the payment systems used by Japanese banks. For controlled stablecoins like RLUSD that are held by banks like BNY Mellon, Bitcoin is not the settlement token. That's why XRP is different, and those old methods don't work anymore. Also, don't forget that the last bull market was intentionally stopped. XRP was dealt a heavy blow when the SEC sued it. While other currencies were taking off, Ripple was in court. XRP was only used for speculation for a short time. It's over with this cycle and that wait. Now, theory and usefulness are coming together. Let's keep it easy. Banks aren't getting custody ready for you. They are getting ready to take control of themselves, their balance sheets, and their payment rails. And it will be a long time after the big move has begun before they add a retail choice. You should not wait for JP Morgan to offer an XRP custody product before you move. It is already too late. That's why so many private firms are rushing in. This is the reason Ripple is limiting its relationships with custodians. That's why whole Asian countries are getting behind XRP, because once rules are set, ETFs are released, and those corridors go live, demand won't be judged by small flows. It will cost billions. Allow us to move past the if and talk about the when we talk about banks and custody. Indeed, Jake CLAVER is right that banks do not have the right infrastructure at this time. However, the signs are clear. We can't give custody. It's going to happen. Why? In other words, the money system is going toward tokenization, and banks may not like it. It has already been said by Ripple. They think that 10% of the world's assets will be tokenized by 2030. There is $16 trillion worth of value on the chain. Also, banks can't do nothing when there are trillions of dollars worth of tokenized assets at stake. They can't say, let Coinbase or Kraken handle care of our money. The government won't let it happen. The government won't trust it. And governments will not stand for that kind of structural risk. Banks will have to do something, even if they're taking their time today. Take a look. If 10% of the world's real estate, commodities, bonds, and stocks are tokenized on ledgers, you need custodians that are insured, regulated, and linked around the world. Who are the only ones who can do that on a large scale? Banks. Today, those are the same banks that don't want to hold XRP for small buyers. They don't want to be the first ones to move, but they will have to. The best part is now here. XRP is already getting ready to be at the center of that system for custody. No, not Bitcoin, not Ethereum. Why? Because XRP was made to be used for payment. It goes through borders very quickly. It can handle a lot of traffic without getting backed up. There are no plans to turn it into a smart contract playground for joke coins. It's a layer of world liquidity. That's why 80% of Japanese banks are getting ready to add it to their banking systems. So BNY Mellon is putting its name on Ripple's stablecoin. That's why South Korea has already given the go-ahead for institutional care. The story that doubters will tell you is easy to understand. A lot of people control XRP. They will say that Ripple has too many keys. It will be time for the escrow. They'll call it a banker's coin. That being said, these same people will cheer when banks say they are tokenizing assets on private Ethereum. It's clear that they are lying. Ethereum is in the same boat as you if you really think that decentralization is the only thing that counts. Its foundation set the rules, hired lawyers to set up its free pass, and still has a lot of power over important developments. What's the difference? Ripple set up hallways. Ripple made deals with others. Ripple worked hard to fix a real issue, how to quickly move money across countries. Ethereum is looking into every story you can think of. DeFi, NFTs, DIOs, and stake. Ripple is very focused on one goal, a world settlement. Banks are aware of this. That's why XRP storage solutions will first show up in the hallways of banks and other institutions in other countries. Asia is always the first to do something in this area. They don't wait for Washington to get stuck. They don't wait for panels of the European Central Bank. They do something. It wasn't a publicity trick when South Korean banks said they would hold XRP. That was the start of a big change. Japan will have the same thing happen. It will happen the same way in Singapore. Western banks will follow once Asia shows that the plan works. This brings us back to how the market works. The real question isn't can XRP hit $5 or $7 once those doors open and ETFs go live. The question being asked is how fast will institutional funding be able to push it through those levels? Because this cycle is different from the last one in that usefulness meets speculation head on. Let's take another look at the numbers. During Jerome Powell's speech, $30 million in net imports caused the market cap to grow by $15 billion. That makes 480 times bigger. That isn't an idea. This is facts. Let's make it bigger. Imagine that $1 billion came in through ETFs. If you use even a small part of that ratio, the market cap will grow by trillions. What if the ratio goes down as liquidity goes up? Let's say it goes from 488 to 20. You're still looking at exponential growth. The market cap ceiling theories don't work in the real world because of this. A lot of doubters also like to say that the price of XRP is stuck. People say it hasn't gone over its all-time high in years, but don't forget the reason. XRP was in court in 2021 when Ethereum, Solana, and Cardano were all live. Due to the SEC case, there was no speculating. The gates to the flood were shut. Since there are no longer any lawsuits, XRP is finally ready for the kind of fantasy run it never had last cycle. The utility lines are also about to open, which makes for a perfect storm. But let's look at more than just price. Curse is bigger than the price chart for XRP. The most important part of tokenization is custody. Because if you tokenize $16 trillion worth of global assets, each one of them needs to be kept safe, insured, reported, and saved. This is something that banks don't have these days. There are gaps that are being filled by independent players like CLAVER. Sometimes, though, the big players need to step in. They have no other choice. What does it look like when they do? Here is the plan. Start with step 1, working together. Custody won't be built from start by banks. They will either buy current custodians or work together with them. When BNY Mellon joined Ripple, we saw this happen before. In the next 6 to 18 months, more crypto managers will be bought out. Step 2, alignment of regulations. It's not just storage and insurance when it comes to custody. Compliance is the point. AML, KYC, tax returns, and checks. That's why banks need time. That's the reason it's slow. The banks will move quickly, though, once rules are clear. They already have systems in place for compliance. All that's left is to add tokenized items to it. 3, do it. Rollout of a product. This is where custody goods might finally show up in stores. But let me tell you the truth. It's not likely that those goods will be made to help you. They will be made to make money for the bank. There are deals where they will hold your XRP and pay you a small amount of the interest they earn by giving it out. Some items will lock your XRP to keep it safe while they use it behind the scenes. When you deposit money, the bank doesn't pay you properly, just like when you use cash. They use the money you put to make more money for themselves. It won't be any different with crypto ownership. Ripple's network will already be handling institutional payments while all of that is going on. That's why people who understand this play now have an edge. They don't have to wait for JP Morgan or Bank of America to release a safekeeping app before they can use it. They can protect themselves. They can use independent managers to their advantage. They can get ready before the wave comes. Now, let's talk about world politics, because ownership isn't just a matter of facts. It has to do with politics. Remember what took place when Russia couldn't use SWIFT? That was a big change. Other countries saw that the U.S. could use the banking system as a weapon. All of a sudden, the BRICS countries sped up their search for options. In order to do this, they are looking into XRP corridors, digital payment layers, and currencies backed by commodities. Because countries like Brazil, India, and South Africa don't want to risk being cut off from global banking because of what the U.S. government does. This is the reason why security and tokenization aren't just for Wall Street. They have to do with power. They have to do with who runs the world settlement. The U.S. is currently trying to catch up while Asia and BRICS are making progress. Some people will say, well, the U.S. dollar is still king. They're right for now. For trillions of dollars, though, the infrastructure is more important than the coin itself. The country that runs the rails also runs the flow. All of those tracks have already been built by Ripple. Getting custody is just the next step. This is where the lost SEC text messages come in. Because regulators mess up openness, chairman text messages go missing, and Ethereum gets off easy while Ripple fights in court. That's not just incompetence. Now that's politics. And in the West, politics determine how quickly new jails and prisons are built. But guess what? The market doesn't care about politics. Asia doesn't need to wait. BRICS doesn't need to wait. Now you can see why the change is already happening abroad. Once Washington gets its act together, custody will be used all over the world. And XRP will already be the token used for payment in areas that are not controlled by the U.S. That's why this conversation is about more than just whether banks will hold XRP. Will you wait for them? That's the real question. Or are you going to understand that custody is proof that the system has already changed? Because it won't be early when BNY Mellon gives you a retail XRP storage product. It will be late. Let's take this further. We now know that custody is on the way. that banks move more slowly than independent players, and that Asia and the BRICS countries are already ahead of the West. What does this mean for XRP's part in the restart of the world's finances, though? It means that the right storm is coming together. Take a look at where we are now. Crypto is still based on a lot of speculation. A lot of people are interested in meme coins, NFTs, and hype cycles, but the rails are being built under all that noise. Networks for settlement, tests for tokenization, cross-border corridors, and regulatory frameworks. Before a big change in business looks like an overnight success, years of work go into making it happen. Also, XRP is right in the middle of all of this. In the long run, banks will offer retail customers custody options. But what's really interesting is how they're already getting ready to use XRP for their own systems. They will need a payment layer when they tokenize stocks, bonds, or goods. That's how XRP was made. With Bitcoin, they can't do it. It moves too slowly, uses too much energy, and wasn't made for settlement. Ethereum won't work for them. It's too crowded, too expensive, and not reliable enough for funds that are needed right away. Speed, efficiency, and confidence are what they need. That's XRP. Finally, let's tie everything together with the ETF talk. With ETFs, institutions can start to use the market. When an XRP ETF goes live, it will be flooded with orders. These orders will not come from regular people, but from advisors, funds, and institutions that need safe goods to put their money in. Those ETFs need to be backed by real XRP. In order for those goods to work, custodians will need to get and store huge amounts of XRP. This is where it gets strong. ETFs make a cycle that keeps going. For shares to be bought, XRP must be bought first. Protectors of shares buy XRP to back them up. This lowers the supply on platforms. When there is less availability, prices go up. More money comes in when prices are higher. To get more money in, you need more XRP. It keeps going by itself. And this isn't just store speculation like it was in 2017 or 2021. This is the infrastructure of an organization. But don't forget that there is a limited quantity for stores. About 2 billion XRP are in the hands of regular people. That's a small part of the total amount. The institutions don't want to buy your bag. They will get their coins from custodians, Ripple, and straight over-the-counter OTC deals. This is why the chance we have now is still special. It's still early for stores. When ETFs go live, banks start offering custody, and tokenization hits trillions, retail investors will have less of a part to play. Let's talk about the doubts about price goals now. Noses are thrown around, $5, $7, or $10. They use market cap limits, historical risk levels, or the idea of diminishing returns. However, that approach doesn't take into account what happens when new models of demand come into play. BlackRock changed the game when it released its Bitcoin ETF. The demand went through the roof. The market's supply fell sharply. Price changed faster than experts thought it would. And that's Bitcoin, an object that can be bought and sold much more easily, but has no use other than being a store of value. XRP is not like other coins. It will have an ETF demand and a settling utility demand at the same time. Around the same time, there are two waves of institutional acceptance. And we know what can happen with small amounts of money coming in. $30 million coming in caused the market cap to grow by $15 billion. There is a 488x increase there. Now make that bigger. Imagine that ETFs bring in billions of dollars while banks tokenize trillions of dollars worth of assets. The numbers are crazy, even if factors go down as liquidity rises. The story that XRP is stopped at single digits doesn't make sense because of this. It doesn't take into account energy demand, multipliers, ETFs, or the fact that the last cycle was artificially stopped by a lawsuit. XRP never really took off. The first time that speculative freedom and utility acceptance will meet is in this cycle. Let's go back to geopolitics for a moment. Because money is being used as a weapon, tokenization and ownership are very important. It sent a message around the world when the US and its partners cut Russia off from SWIFT. The world's money can be used as a weapon. These places didn't like what they saw. The BRICS countries sped up their search for options. This is why they are trying settlement layers that are not controlled by the US. That's why they are looking into systems backed by commodities. And that's why the passageways in Ripple are so appealing. They offer a safe place to settle disputes. If you are a BRICS country, you don't want your payments to go through Washington or Brussels. You want to be on your own. That's what XRP gives you. That's why it's being put together first in Asia. That is why banks in South Korea have already moved. That's why Japan is getting ready. Politics, lawsuits, and lost techs are still slowing down life in the West. But things are already getting better in the East. Now for the hard facts. Markets credit people who act, not people who talk. Asia will already be using XRP pathways by the time the SEC cleans up its mess, US banks start offering custody, and Washington wakes up to the idea of tokenization. The train will no longer be at the stop. This is why it's so important to talk about parenting. Getting into custody is not the first step. The end is in sight. When banks hold XRP for regular people, it's proof that the system has already turned around. People who want to be early adopters will already be set up. It will be too late for the boosters to work. And people who are looking for a cool little custody product from JP Morgan will have to wait a while longer, buying well above where early movers put their money. What does this mean for you? With a chance. It's easy to see the bigger picture here. The tracks are being put in place. Asia, BRICS, energy corridors, tokenization, custody, and ETFs are the ones to watch. The West will follow. The market will not be the same when banks are ready to hold your XRP. There will be less demand, prices will go up, and ratios will get smaller. There is still a time in stores right now, a window that is getting smaller, but still a window. This window will close, and XRP will no longer be just a speculative asset once ownership is common. It will be building things. People who saw something before everyone else get the most out of it when it becomes infrastructure.